Welcome to the What's Your Deal podcast, where we discuss business acquisitions, investments, management, and exit strategies. I'm your host, Matt Euler. Let's dive in. Welcome back to another episode of What's Your Deal. It's an honor to have two guests with me today who are actually repeat guests. We've got Colton all the way in from another state in the snow to join us in the studio, and we've got Luke, who have both been on episodes in the past. And when I talked with them more in depth about some of the interests they have, we talked about what I called cryptocurrency, and then they quickly corrected me that what they're interested in is not cryptocurrency, it's Bitcoin. And as I got to understand more about how they use Bitcoin and their approach to using it, I found it fascinating. So this episode is going to be specifically about Bitcoin and how these gentlemen use this in their life and all of the ways that it helps to build wealth for them. So I'll start with some introductions and we'll dive in. Luke McCarthy is a real estate investor who's flipped over 1,000 homes in his career and is now a co-owner of several businesses based in Northern Arizona. Colton Imming is a partner with Luke and Keith Scarcity and has a diverse background in finance as an accountant, a controller, and an entrepreneur. Luke and Colton have joined us as guests in the past to discuss real estate, business acquisitions, and partnerships, but today, as I mentioned, we're going to dive into the investment into Bitcoin. So gentlemen, thank you for joining me.
Thanks for having us.
Great to be here.
Absolutely. Well, let's talk about Bitcoin. So you both have heavily invested in Bitcoin over time, and I don't really even know how long that's been. But can you walk our audience through the distinction between Bitcoin and cryptocurrency, and what is it that has captured you so much with Bitcoin and been such a driving principle for you?
Sure. I think most importantly, Bitcoin is decentralized, secure, and there's a finite supply. And so all these other cryptocurrencies, you have someone central in control, and Bitcoin, there is no central person in control. And then there's a finite supply. There will only ever be 21 million Bitcoin. Okay. And so I think we can kind of expand upon that a little bit.
Yeah, and it's secured by the largest computing power in the world, right? So like the network is secured by energy that mine the Bitcoin on them, so I don't know if we need to get into all those details,
yeah, right.
But it's secured by energy, physical energy in the real world.
Okay.
Right. So through these computers that are doing the math to solve an algorithm to mine Bitcoin.
Okay. So is the gold standard, even though I know there's no standard anymore, at least as I understand it, is there any similarity between what you're describing with limited supply and the individual asset that's there? Any comparison there?
Well, I think that's a great question. So gold is our most limited, prior to Bitcoin, was the most limited, money.
Okay.
Most scarce, right?
Most scarce.
Limited supply.
Okay.
So gold inflates at roughly 2% a year. If the gold price goes up, gold miners just go deeper into the ground, right? So it's not finite like Bitcoin.
Okay.
You can always mine more gold, go deeper into the ground, other planets potentially. And so that's the big difference. There will only ever be 21 million Bitcoin.
And why is that? What puts the cap on it? Or who? When you say it's non-centralized, I think that we're getting into that too. Is that right?
Yeah.
Yeah. So, I mean, it was, invented by Satoshi Nakamoto, who's an alias of a group of people or one person. It's unknown who it is. This guy, taking a step back, this guy saw a problem in the world, right? And in specifically money. And this all gets to trying to solve money and government's natural tendency to inflate the money, steal from, the money supply.
Okay.
We got into this barely in the last podcast.
Right.
And I don't know how much to rehash on that, but throughout generations, the governments have always inflated the money supply. If you have control over the money, they've inflated it, effectively stealing from the people.
Going back 5,000 years.
So it's not a new concept.
It's not.
The incentive is too great. It's too great to do that.
Oh, interesting.
Right. Today's world, you have a problem like let's say the great financial crisis, right? Mm-hmm. What's the answer? Do you let the banks fail, or do you print more money?
Yeah, they printed more money.
What are you going to get reelected doing?
Mm-hmm. Solving those problems by printing more.
The incentives are there for when it's easy to just print more. Let's just do that.
Okay.
Right, instead of the pain.
Yeah.
So over time, you just compound that over time. It always ends up in governments printing.
Okay.
Right. Whether that's coin clipping, like I had mentioned, there's different ways they do it. But today's day, it's all fiat. Which it's just a whole nother
pushing
question.
a button on a computer, essentially.
It's not backed by anything, right? It's just paper money that we all believe is worth $1. $1 worth $1.
And the fluctuation is just totally out of our control, far bigger than anything we can understand. And we're just playing the game.
Correct.
And so how does Bitcoin address that?
Yeah. So there you go. Right.
Yeah.
So you got to take a step back to understand what money is first. And that's a whole conversation. Bitcoin was intended to address what we just talked about. And so this Satoshi Nakamoto created a protocol that's secured by energy, by compute power, right? And it releases Bitcoins over time into the world like you're mining it, like you're physically mining it. It's not, it's digitally being mined, but that's the concept.
You're using computer power to mine Bitcoin, energy.
To create it. Mine, create.
Yeah, I use mine just to make it equatable really to like gold. Like you are using energy to go dig, human power to go dig for gold.
To get something. Yeah.
This you're using energy in the form of computing power to release more Bitcoin.
Okay. And so what was it that...
And so this is the first ever provably scarce resource, commodity, whatever you want to call it, that's ever existed. We invented it, right? So this is an invention to be the best money in the world.
Okay, and it is a currency, right?
Could be defined as a currency.
It could be defined as the currency.
Or the way I think of money, and money was also an invention.
That's a great point.
Right. So centuries ago, they invented money as a way to exchange goods. Mm-hmm. And money is really meant to be like, I can take this thing we're calling money. I can hold on to it over time, and it's going to be able to buy me something. I'm going to be able to exchange it for something the same value that I, obtain that money for. Mm-hmm. It's like if like a cow was equal to, gold bar. Back in the old days, a gold bar. Well, the money you can use that. Well, you can use that gold bar to get a cow, or you can use that gold bar to get a house. And let's say those are equal. You wouldn't want that gold bar to then, not be able to get you a cow or a house. You'd have to use 2 gold bars to get a cow or a house if it didn't hold its value. Does that make sense?
Yeah, it does. It's making me laugh because I remember reading a book when I read a lot, trying to educate myself, and it was around currency. And the whole it's just what you said. Like, do you want to pull some paper out of your wallet, or you want to tote a cow around with you to trade for something you want, and so it became a convience factor.
So
and
they invented
it.
They invented money, right?
Yeah.
And now money we think of as the dollars, the fiat that we have. But money is that's an imperfect money.
And subject to manipulation.
By other humans who are incentivized to
do it.
Yep.
What a bummer.
Yeah.
It creates a lot of
there's good
problems.
news.
There's good news.
That's why we're here.
Yeah. So when did, and I've talked with Luke a little bit privately about some of the things that had occurred with real estate and some of the things where you're like, I'm just not going to play that game anymore. I'm going to sink more into Bitcoin. But can you walk us back were you guys partners and friends when you discovered this together? Was it one of you? And how did this evolve for you to decide this is something we're going to pour into? And maybe it's correct me if I'm wrong, but it's going to be to a large extent the currency you're going to trade in.
Sure.
Yeah.
Yeah. I think we probably went down the path at a similar time.
Well, you introduced.
I introduced you, but we were both kind of going down the path around the same time, kind of mid 2020, when we both had a lot of conversations about, what the government was going to be doing, as far as printing money. And we knew with the trillions of dollars that were printed in 2020 that asset prices were going to rise. And at the time, it was kind of just looking for what's going to be the best horse, the fastest horse in the race.
Okay.
That thought process has evolved over time, but I think that was my thinking, at least at the time.
Yeah. And there was a big question that had always been eating at me. Because all this, like understanding this and what money is all because of Bitcoin. I didn't know what money was. Going down the rabbit hole of understanding Bitcoin got me to understand, it's a whole bigger game being played.
Interesting.
Rather, like you can get political, you can go, get super political about one left or right or whatever. Money is the source of all of this. So anyway, I had always been wondering, how can they keep increasing the money supply and there not be inflation? That question stumped me.
It's a great question.
For our lifetimes, we've always kind of had 2 to 3%, 2% inflation.
Yeah, or less,
and
right?
It was supposed to be, that was, or less, yeah, but that was just normal.
Yeah.
That's,
Yeah, but they're expanding the money supply at 7%. So why isn't there more inflation? And he had turned me on to the answer, which is, there's technology gains that are making things more efficient. So yes, you have people adding more money to the money supply, but you also have all these efficiency gains from technology that humans are developing that's bringing the price of things down. So they have to print more just to stay at inflation neutral. So what does that do? That means you're adding more money into the system. Prices are going down. People have more money, so they buy assets. And so that leads to the concept of asset inflation. And that's really the root of, there's a lot of things that come from that, especially like the wealth gap and all that stuff. It's a whole nother conversation.
Yeah.
Well, and it's like,
so we've touched on so many things already. I feel like there's a lot of arrays here. I don't know.
But talking about inflation, deflation might be, going down that road might be important.
Yeah.
Yeah, well, and for us and for our audience, it's like we're trying to be more educated about what's going on, right? And the topic that we have here, it's one thing. A lot of my guests were talking about buying a business, and you go get an SBA loan, and here's how you. I mean, it's real practical.
Sure.
This conversation is a much longer term, and I know from talking with you, Luke, that's how you look at it. I mean, your kids are learning more about Bitcoin and investing in Bitcoin, and probably Colton's as well. I mean, this has become a passion, and maybe even more for you both because of how strongly you feel about what you're seeing that's driving you towards this. Is it fair to say?
Absolutely.
Yeah. So,
and just to complete that previous
please.
thought. So if you're saying there's no inflation, right? Let's just say inflation's been very low and wages of normal people, right? You just work in your normal job. Your wages don't go up. They go up with inflation. They don't go up with the rate of money expansion. You think you're okay, I got a raise and it went up with the price of inflation. I'm doing fine. Then you look around at the house you want to buy. It went up more than the price of than inflation went up. All these other assets around you go up more than inflation. Yeah, the food you're buying may stay down. Other things that are subsidized, but have subsidies and all that will stay down, or where there's major technology gains like TVs and stuff stay down, prices stay down. But the real true scarce assets all go up. And that's what I'm talking about. Is like you're making the same amount of money that you've been making because inflation is quote unquote zero or low. But the actual value of scarce assets around you is going up much faster than that.
It's scary.
And that's that divide that's happening.
Okay.
Yeah, it makes it much harder for those that don't own assets to catch up.
Okay.
Right?
That makes perfect sense.
If you didn't own a house prior to 2020 and now we're in 2026 it's that much more expensive for you to buy a house. You know, you got left behind.
Which we're seeing.
We're seeing that.
And I've got a 23-year-old, a 21-year-old, and a 20-year-old, and I can't even fathom, without significant help from Audrey and I mean, when are they going to be able to buy a house?
Right.
And how? And where?
Yeah.
And it's only going to get harder with, you know, what we know, which is the government's going to continue printing more and more money. Okay. And so those assets will ultimately, there's going to be ups and downs, but ultimately they're going to keep, you know, rising faster than wages can keep up.
Yeah.
Which adds to the wealth divide.
Which will continue to add to the wealth divide.
I mean, it's only going to be magnified when you got, you know, what are we at? 38 trillion of debt, 120-something% debt to GDP, a 2 trillion in deficit, annual budget deficit. The answer to that is not going to be being thrifty by the government. Right? The answer to
they're
that is
not known for that
more.
either. Yeah.
Right? We all know what's going to happen because they're not going to get voted in if they're the ones saying, hey, it's going to be hard times for the next 10 years.
And and at this point, it's too late anyway. They couldn't even make that choice, you know, electing a Ron Paul or something like that. It couldn't even happen today because asset prices would drop 90%, 95%. If we actually had someone that wanted to change things, right?
Yeah. Yeah. Well, we've borrowed so much from future generations to get to where we are. Well, at some point, you have to pay that price. And the easiest lever that the government has to pull is print more money and just drive inflation up, as opposed to like austerity or defaulting on the debt. So,
okay. So then the way you use Bitcoin, again, that helps you and your family have a true asset. And again, I'm trying to be careful with my words here, but a true asset that you feel good about. And the price can fluctuate and go up and down. And Luke, I've heard you say in the past, and maybe it's changed, but that you would never sell it. And so what is that about? So how are you using Bitcoin to offset everything that you just described that's honestly terrifying when somebody's willing to go down that road and think that through?
Sure. Yeah, I mean, I think I look at it as a long-term asset for my family, for our companies, something that over time, you know, historically Bitcoin's appreciated at 40% annually. So it's going to have ups and downs, but if we're looking at it on a long-term time horizon, 5, 10, 15, 20 years, you know, it should continue, maybe not at 40%, but it will more than keep up with the rate that our money is being devalued, you know. And I think it's important to compare that to like real estate, right? Real estate historically is appreciated around 6% a year. If you compare that to the rate of money entering the system yearly, which is what, 6-7%, real estate really hasn't gone up in value that much. You know, it's people are buying real estate to not lose money.
Okay.
And it took me a long time to realize that. I was in real estate for maybe at least 10 years before I came to that realization that I was just barely keeping up with all this real estate I owned. And so that was part of the big shift into Bitcoin.
Okay. And you have mentioned that at this point, you're looking at selling some of the real estate holdings you have to buy more Bitcoin. Is that simply an appreciation piece, or is it just as simple as what you just described? I mean, what's that about? Because real estate has contributed to how you've accumulated wealth for yourself over the years.
I mean, definitely part of it is that appreciation piece. But you know, another part of it is just having the sovereignty of owning an asset that the government can't control. And, you know, at the end of the day, we don't really own our real estate, right? Try not paying taxes. And then you'll find out who actually owns it. And so, you know, I mean, I was the biggest cheerleader of real estate for years, and I'm not against it. It's just we found something better that the government can't take away. And I can take my Bitcoin with me anywhere in the world in my head. Mm-hmm. I can't do that with real estate. Real estate is not a liquid asset. Bitcoin trades 24/7, 365.
Yeah, that's powerful.
If you need to liquidate, you can sell on a Sunday evening at 2 a.m. Uh-huh. Real estate might take 3 to 6 months if you're lucky to sell. So that's an important aspect just with what's going on in the world. And I always plan on being here and living in the U.S., but you never know. As, the leader of our family, I also need to have other potential plans. Uh-huh. And if we did have to, leave, we can take our assets with us. There's a history of people having to flee countries, oppressive countries, and not being able to take anything with them. Even gold. How much gold can you take with you if you have?
Yeah. How many cows can you walk?
How easy is it to confiscate once they see you with it?
Right.
And again, I don't think that's going to be the case here, but it's also a non-zero chance.
Mm-hmm. Yeah. So, from an investment perspective, right? Because there's the investment side, there's the humanitarian side.
Yeah. Uh-huh.
Right.
Great point.
So the investment side, you have wealthy people or people with assets always looking for places to store their money, store their, life's worth. It's not in dollars. They go to real estate. That's the primary place to go.
Real
So
estate, art.
Yeah, you put it into these things that it will hold their value. So that's why people just naturally go to real estate. When you think about Bitcoin, it's like, wait, is that going to take it? It's very early, so it's super volatile. Bitcoin is, right? We're very early stages of this whole thing. If it does become that store of value and people think of it that way, which is the way we think of it, and there's risks that can happen, right? There's risks to it along like being so young of an asset. But if it does that, it will steal a lot of that real estate's premium, right? Real estate isn't valued at the price at cash flows on rental income. Mm-hmm. It's valued on its store of value and ability to hold its value over time.
Well, and it's funny, you hear the comment, they're not making any more of it, real estate, and yet, you're sharing with Bitcoin, they're not making any more of it as well. And so there's a lot of similarities there that I would have never thought of before.
Sure.
And I think coming back, Luke, to what you had shared with me about real estate and your ability to own it and hold it, maybe you can share that story about the valuable piece of property that you owned that the government decided to change some of how that was going to be held and access to it, and dramatically devalued that piece of real estate.
Sure.
It just happened to you.
Sure. Yeah, it was a piece of real estate in California that the state of California, and Newsom in particular, the state wanted to get their hands on access to this real estate. And over time, they were able to do that. I don't want to go into the logistics of it, but they were able to get access to the real estate, and it dramatically devalued the value of a real estate. We still owned it after the state got access, but effectively the state made a case that all Californians needed access to that real estate as well.
To your real estate.
Correct. And
to the
property, right.
Property, and mine and a number of other owners that owned real estate in this area. And that, for me it was a breakdown of private property rights. And that's, been key since the founding of America. So once you see the private property rights break down, it's a very slippery slope. And so there other things are happening in California right now that Colton and I have been talking about where private property rights are continuing to break down.
Okay.
With the unrealized capital gains tax. Mm-hmm.
Or the taxing your net assets.
Or sorry,
your net
taxing
worth tax.
Correct. Yeah. So it's just a domino, and that was part of the reason for us leaving California was that breakdown of private property rights.
Okay. And so with Bitcoin, you alluded to that you invest in Bitcoin through your company too. And so it's is that there for for operating capital? Is that there as just a way to use business profits to invest in something that will provide a great return? How's that play out for you?
So as you know, our strategy with our holding companies to own multiple, small businesses in the Prescott, Northern Arizona area, right? Mm-hmm. And help be good stewards of those businesses and grow out, build our, the total businesses that we own and help employ, the area. To do that, we have to build a, treasury, right? We aren't just taking all the profits and distributing it to ourselves. We're wanting to grow our treasury, mm-hmm. but then buy the next, small business and be good stewards of that business,
and then hire the best talent, the best employees,
right? So, in order to do that, we have to build up either cash or some other asset.
Interesting.
So I know for certain that in 50 years, that cash that we have is going to be worth, 10% of what it's worth now. Mm-hmm. If not a lot less than that, right? Historically, over time, that's, the last 6 to 50 years, something that costs $1 costs $10 now. So I know that cash is going to be worth a lot less than it is right now. Do we want to hold our money in that, or do we want to find an asset that we can actually keep its value and then we use that to buy the next company?
Wow. The comment that the cash will be worth less.
It will be,
and I get it. Yeah, I think about how many business owners I know, how many people with retirement. I mean, they're doing everything they can. A lot of them, or doing a lot to put away for the future. And that comment is disturbing when you realize, no matter how hard, and we feel it as a family, and we're blessed in lots of ways, and we feel it too. Like we're constantly trying to be great at business and generate profits, and then those profits get hit by taxes, and then you pay some more taxes somewhere else and some more taxes somewhere else. And then before you know it, and now there's this other, I'll call it a tax just for the purpose of our conversation.
It is. It's a hidden tax.
It's a hidden tax.
It's the most egregious of the taxes because it's hidden.
Mm. And most people don't know.
Mm-hmm. The inflation specifically is a hidden tax.
Yeah, so this idea that you run as fast as you can to get to the finish line, and then where'd the finish line go?
It keeps moving.
It keeps moving.
And to be clear, we have all benefited from this system. Mm-hmm. Like we're the beneficiaries. So we're talking about
because we're asset owners.
Because we're asset owners.
Okay.
Right. That I was just fortunate enough to be interested in investing. Right. So that's where my passion was. And that, thank goodness, because that's where all the value is going based on the way this system is set up. I didn't know that when I was a kid. Mm-hmm. Right. I didn't know that when I started my career. So we're all beneficiaries of this, but knowing it, we have to protect ourselves. Mm-hmm. It's also interesting because you say that about hey, the dollar is going to be worth way less in 10, 50 years than it is right now. Everybody agrees with that statement. You won't find anyone that's I don't agree with that. So then what's the next step? It's this Bitcoin thing is not a crazy idea when your dollars are going to be worth way less in 50 years.
Well, it's one of those things. And that's why when you said it, I was thinking, wow, a lot of us just keep doing what we've been doing because that's what we were told to do, and it seems to make sense, and you keep doing it over and over again, and then at some point you hear something like that, and it's a little shocking to think about that. And it like you said, it's not hard to imagine how could that not be true in light of all the dynamics that are in place. And so then this is where Bitcoin comes in for you guys and for everybody to consider.
Absolutely. Yeah, I mean, I think about business owner who sells his business at 60 years old, maybe after taxes, puts $1 million in his pocket. He's going to live till 85. So 25 years. Well, that $1 million at 60, the buying power on that $1 million 25 years later is going to be
at best.
At best, right? And so I think a lot of people are kind of coming to this realization, that they're losing buying power. So
it's enough to get one irritated, isn't it?
It absolutely is.
I mean,
it absolutely is.
You think about let's not buy that today, sweetheart. We're saving, and yet the biggest hole in that saving bucket is the diminishing of the value of the dollar.
Yep.
And then you get political people fighting over all these things that are irrelevant. Both parties, they're going to keep increasing spending. They're going to keep hitting the money printer.
Because they have to. Yep.
So it's like everyone's focused on the wrong thing. Like from my perspective, it's just so clear. And everyone's fighting and so convinced that they're right about, whatever politician's going to do them. It's like, they're not.
Yeah.
You're fighting over the wrong thing. You're getting excited about the wrong thing.
It's a great point. So what does somebody, well, let me ask a couple of questions I want to get to so you can be thinking about it. So what does somebody do? I mean, I joked during, I think, our conversation, our episode that, I bought some and I've sold some, and I'm not crystal clear what I bought or sold.
Right.
Or really how that fit, but it was just the thing to do. So I'm going to ask you, somebody like me, where does somebody get started if they're like, well, I get it and I want to make a change? And the other piece I guess I'd like to know is there a plan B? So is it literally just Bitcoin, or is there something else that you've identified? Because the problem is, just hearing you guys, the problem is crystal clear.
Yeah, it's what are you going to do about the problem?
It's what are you going to do about the problem? And is there one solution based on what you've discovered so far, or is there a plan B?
It would be disingenuous to say there is no other option than Bitcoin.
Okay.
Of course there are. We think they'll be much worse. Like we think that Bitcoin will be the best option.
Yeah.
Okay.
Gold is still a decent option.
Yeah. You've seen what gold's done over the last I guess I don't know when this comes out, but it's like, it's doubled over the last year or whatever. That's a massive move for gold.
It is.
Right. So things are happening in the back. So it depends on what you want to, you can invest in multiple things, and you should, right? You don't have to be Bitcoin only. Especially with being such a young asset. We just are convinced. My advice, I didn't mean to cut you off, Luke. My advice is to dollar cost average in.
Okay. I was going to ask
right.
that. Yeah.
I think that's the best way to do it. The worst thing you can do is get over your skis, get super excited about buying anything. This applies to any investing. Buy it, get overextended, and then it goes down and you just have to sell because it's too much. It makes you sweat. Right?
So yeah, buying a small amount and whatever you can afford, daily, weekly, monthly would be our recommendation. Or just call Colton direct. We can.
All right. We'll put his number in the show notes.
Yeah, right. Yeah, thanks. Thanks. I appreciate it. Glad I came on.
But that's probably the best route, just dollar cost average.
Yeah.
Okay. So do you both still follow that? I think I understand that your holdings are pretty significant in Bitcoin. I mean, are you still dollar cost averaging on a regular basis, or what's your approach? Feeling the way you do and having participated for as long as you have.
Sure. Yeah, I definitely dollar cost average. Dollar cost average for my kids. I got a weekly buy, and then if Bitcoin dips, like right now it's dipped recently, I'll buy a little bit bigger chunk if I've got cash to do that.
Yeah. Excellent.
It's a common thing with us Bitcoiners that we never have cash because we always put it in.
You shouldn't really have cash if you're a true Bitcoiner.
Well,
so that's the problem.
It's not the best investing advice. You want to have and then not investing advice. I hear everyone say that this is not investing advice, but just trying to enlighten people on the world.
Yeah.
But dollar cost averaging, I think, is the way to go for sure. We're do that for the business. That's our plan with the business. Okay. We've done some slugs of purchases when we've thought, it's gone down. And we think it's just a good opportunity. But generally speaking, we're just buying every week.
Which is such a great, I just want to point this out. It's funny, money is just such a powerful topic anyway. And it's so funny, whereas a lot of people could see Bitcoin go down and start getting anxious, and you guys are like, all right, time to get some more. And who's right? Well, it just depends on where you are, but it's because of your belief in the long-term outcome from it, why wouldn't you? It'd be like no different than real estate. If somebody is absolutely sold that real estate is the latest and greatest thing to participate in, when it goes down, they're saving to buy it when it goes down.
Right.
So, yeah, it's no different, really.
Yeah, and it's just Bitcoin's the one thing that has a truly finite supply, right? And so we've never seen this type of asset, if you want to call it that, in the world. So it's hard for us to wrap our heads around it. I mean, because, the upside is infinity. There is no cap to the upside when there's a finite supply like that.
You mean as far as how it could grow?
Correct.
Yeah.
Yeah, the only mechanism to, if there's new demand, the only mechanism to get that demand is Bitcoin that's already been, people already own and they're selling it, or the price goes up. There's no other supply source. Unlike every other thing in the world. There's no other thing, asset, commodity, whatever you want to call it, that exists where you cannot create more of it.
And so I know I touched on that a minute ago, but what stops there not to be more than the cap that's already been identified?
Oh, yeah.
What controls that?
We skipped that. It's just written into the code.
Okay.
So anyone can, read or audit Bitcoin's code. And there is a hard cap, 21 million, that in the code it says there will never be more than 21 million.
Okay.
Currently, we're mining Bitcoin. I think 20 million, just under 20 million Bitcoin have been mined. So we have another million Bitcoin that will be mined over the next, until 2140. So whatever that is, 120
years.
Yeah.
Okay. And so if somebody wants to buy some, it's funny, I don't like feeling stupid often, but in this topic, I definitely feel that way very often, especially when I talk with you guys. So
we're not trying to make you feel that way.
I know. No, it's fully me. It's self-induced. But I think I shared with you, buying it, and I can buy it through Coinbase or one of these, one of these mechanisms. But that's not what you're doing, right? So,
correct.
So if somebody, and I'm just going to say me, right? I'm ready to buy some. I want to start dollar cost averaging, and I want to follow this principle. What do I need to do?
There's multiple ways.
Okay.
The easiest way for someone from your perspective, I would think, for me too, it took me a while to understand how to properly secure my Bitcoin, right? But you can just go onto your Fidelity or whatever brokerage account and buy an ETF, and you have Bitcoin.
Okay.
Right. So you can do that.
We don't really recommend that, by the way.
Okay.
Yeah, but that's the easiest way for people to digest.
Okay, and what can you describe ETF for people who?
Just like a stock.
Okay.
There's big, right?
Yeah.
We don't need to get too deep into the weeds on it, but basically just buying a stock of Bitcoin holdings.
I see.
So
there's a BlackRock and Fidelity have, there's IBIT and Fidelity FBTC, I think is what it is. You buy a share of that fund.
I see.
And then they buy Bitcoin with it.
I get it. Okay.
So they're securing the Bitcoin for you. Right? And from a property rights perspective, that's an IOU.
Okay. Yep.
To Luke's point on if you want to then go somewhere with that, you need to have that in your own
possession,
a digital wallet.
Okay.
Or a hardware wallet. There's lots we could go down that path. That's a whole nother subject. But
okay.
But probably the best way is just, a Bitcoin only exchange. Coinbase is not Bitcoin only. They
I see.
sell a lot of other cryptocurrencies. So Bitcoin only exchange like a Cash App or Strike, going on there, setting up a DCA, and then when the dollar amount gets high enough, moving it into your own digital wallet.
Okay.
Which is its own podcast, probably.
Okay, sounds good.
Yeah, and the ETF is really just, that's the simplest way
to participate.
Yeah, that can make sense for people to participate, but then to really do it right is what.
Okay. Okay, so we'll process that. But I guess for people who want to get started, it's getting their arms around the concept enough to feel good about it, and then to start participating, right? It's so easy to put this stuff off.
Yeah.
And based on the supply-demand scenario you just shared, shouldn't wait too long, right? I mean, as the supply diminishes, the demand will increase like everything else.
We're still early.
Okay.
We're still very early.
Okay.
We were just talking earlier, kind of comparing it to, we're at the internet in 1995 stage of Bitcoin.
Okay.
So we've got a lot of years of runway ahead of us.
Mm-hmm. Innovation. Yeah.
Exactly.
And so what would it take for you guys, what would it take for you to be like, you know what, it's time to liquidate this because something is not right or whatever? I mean...
Well, so
because you're liquidating it back into dollar. Right?
Yeah.
So then,
there's still risks to Bitcoin. Mm-hmm. It's still very young, right? It's not proven, and that's why it's so volatile, and it's not become an everyday. People are skeptical of it. They don't believe like, what is this thing? And so there's a huge education gap in understanding it. Right. And most people, the vast majority of people will buy it once it becomes, well, that's what you do. Mm-hmm. Right. So there's a long way to go between now and then. That's probably decades in my mind. Right. There's technology risks that I don't know of that will come up. We've been talking about, there's like quantum risk. If they develop a quantum computer, what does that mean to Bitcoin? What does that mean to everything that is secured with cryptography, right? So there's risk with that. Mm-hmm. There's things that provide risk, that bring risk. The longer you wait, the less risky Bitcoin will become.
Because it's
more expensive it will become.
Yeah.
Right. There's been risk over the last, Bitcoin's been around for, 18 years? So... you can pick many times along the way where there's been big risks to Bitcoin. And there's a reason the price was a lot cheaper then. Right.
It's a lot riskier today, Bitcoin at $60,000 or $70,000 than it was at $1.
A lot less risky?
A lot less risky, I'm sorry. Mm-hmm. Yeah. A lot less risky today than Bitcoin at $1. At $1, the government still could have potentially shut down Bitcoin. Uh-huh. Now we think we're well past that point. So that risk is no longer there.
Knowing that the protocol works, right? That there's tons of things that were going on back in the Wild West days of Bitcoin. We still kind of are there, but I mean, it has been de-risked greatly.
Huh. Yeah.
And it's only going to become less and less risky as time goes on. But that comes with price. And like there's a saying, like you get Bitcoin at the price you deserve.
That's interesting.
So
yeah. Well, it's a fascinating conversation, and it certainly has inspired me to want to own some and get on the wagon with just maybe the word hedge isn't the right word, but just
it's a fine word.
Is it?
If you don't understand, like without going down the route of fully understanding it and mm-hmm. like taking, because we've spent hundreds of hours. Mm-hmm. Once this came up and it came to my attention of this answers that question that's been nagging at me, and then it opened my eyes to so much more in the world. Like I said, from a humanitarian perspective, from a wealth divide mm-hmm. perspective, from just how politics are meant to just disguise what's really going on in the background. Like it's just so much that is wrapped up into it. What is money is the simplest question that people don't know how to answer that. Mm-hmm. So,
and that's the ultimate question. Yep. What is money? That people need to go down that rabbit hole.
So without going down that rabbit hole, you're hedging.
Okay.
You're just taking the word of people that you respect or whatever. Mm-hmm. So you'll buy a small amount. That's totally fine. But then once you are serious and you're like, oh wait, I want to know what this is doing mm-hmm. and understand it, you'll end up buying more.
Yeah.
And then you have conviction to hold it through the downturns.
Uh-huh.
Like, because that was not easy. Like in 2021 in 22 when it just went down. If I didn't have the conviction I had, we probably would have freaked out.
Well, so that was the question. I mean, clearly, at least from talking with you both, that there's a long term, and I mean, you're not worried about what it does tomorrow because it doesn't matter. If anything, it's just a buying opportunity.
You think I don't check the price of it every day?
Do you?
Oh yeah, of course. But no, you don't want we have a long time preference for sure on Bitcoin. You have to have a long time preference.
Well, that's great. I appreciate the conversation, and as we're talking, I'm thinking about the title of this podcast. What's your deal? I know you both feel very passionate about this, and it's a what's your deal, and you've just pulled back the covers to explain the conviction, and it certainly has opened my eyes to the topic.
And even if you don't want to buy Bitcoin, understand what money is. Do that for yourself.
It's a great
Do that for yourself, for all your convictions you hold about the world. Understand that so that you can, have a better idea of how things work.
Yeah, that's a great point. That's the diminishing of the value of the dollar is disturbing when most of the people I think that are listening to this show are trying to figure out how to accumulate and earn and deserve more.
Yeah.
Yeah. So.
Yeah.
Well, that's very powerful. So thank you. As you know, you both know, because you've both been here before, that I like to finish with gratitude. And the way I get there is, who's helped you in the past and or who have you helped? And so if you wouldn't mind just sharing just briefly a hand up you received or a hand you gave that made a difference in your life or somebody else's, I'd appreciate it.
Sure. Yeah, I mean, I think we were both talking. We kind of have the same person, Bitcoin related.
No kidding.
No one we know really personally. Colton's communicated with him a bit, but Jeff Booth, he wrote a book called The Price of Tomorrow. And it's really, it changed our perspective on money, on inflation versus deflation. And I don't know if you want to expand on that a little bit, but that book changed our lives and our perspective. Probably in mid 2020.
Yeah. And it goes into what we had kind of talked about earlier about how, you're expanding the money supply, but the cost of things are going down. How's that work? Technology.
Wow.
And then it goes into depth, in depth with that. So if you want to understand more, that's the simple answer. But saying it out loud, it's like, oh, well, that's obvious. But I didn't know that. I did not know that. And that answers a lot. And then once you realize that, it's like, well, wait, there's so much more to it when you're on a debt-based system and you have deflationary pressure from technology. How as an economy, how does that work? It doesn't work without expanding the money supply.
Well, I appreciate that. I get, because I have talked with you both individually, but I just get how passionate you are about this and how convicted you are. And so, yeah, that author and that book, clearly, not only did it change your lives, it's changing the lives of your kids and depending on who listens to this, my life and my kids and their kids. And I mean, it's amazing how information, if absorbed and utilized, can change the direction of our lives. It's just mind-boggling to me.
Absolutely.
Yeah.
Yeah, and it's where are you getting that information? Like, what is your source of truth?
Yeah.
Changes everyone's answer to the same question. You can ask the same question of someone. What are they reading? Where are they getting their information from? And it'll change.
It's powerful.
Yeah.
Yeah, and it's something we all have access to, which is the good news.
Absolutely.
To new perception, to be able to alter the way we think and hopefully improve the way we live and be and treat others and all of that. Yep. So yeah. Well, thank you both very much for coming and educating on this topic.
Thanks for being open to it.
Absolutely.
Thanks for having us, Matt.
Yeah.
Yes, absolutely. Well, I hope you've enjoyed that. It's honestly, for me, as I was sitting here listening to this conversation, it's probably the most jaw-dropping episode that I have had in an area that I'm not educated at all. And the conversation will continue to sink into my head. And what do I need to do with this new information that I've learned here? So I hope it opens your eyes in some way that benefits you. And we will see you on the next episode. And that's a wrap on today's episode. We hope you enjoyed the conversation and got some valuable insights into the world of buying and selling businesses. Want to be a guest on our show? If you have a deal that you'd like to discuss with us or a business story to share, we'd love to hear from you. Shoot us an email using the contact information below in the episode notes, and let's make this happen. Never miss an episode. Make sure you subscribe on Apple Podcasts, Spotify, or wherever you listen. And if you found today's episode helpful, please leave us a review. It helps more people like you find the show.